Welcome to Trading Lounge and the US indices for Thursday, July the 14th. Now, I'm going to take an unbiased view of being bullish and being bearish and then break that down and then we'll see what we've got left. And what we'll have left is trade setups to the long side and trade setups to the short side. But I do want to present cases for being bullish and also being bearish as well. So one of the first bullish cases is this one here, where we have the top of the markets here. We have wave A, B, and C down here with 1, 2, 3, 4, 5. There is also a case for putting wave 3 down here and wave 4 over here for that matter. So I won't go into that just yet with that. The other case for this is that this market really hasn't broken out of this particular trend line through here as yet, right? But there are stocks that have broken out of that trend line, like Apple here, which is on the other side. So it's kind of left this part here. And we have to remember that, you know, the S&P is an average of, you know, the 500 stocks that it's looking at, so to speak, you know, and we like to look at the leaders in that stuff. And this is what the leaders are doing. They're broken out of that channel here. So with Apple, for example, we can look at this as an A, B, C here for wave 4 and then break to the downside. We can also look at this A, B, C here as just part of wave A and then a B and then a C. So really all of this leg here from this point to this point is just one leg, and then we go to another leg over here and then we go down to this leg here. So that's possible. So just moving that out of the way for a moment and coming back here. So in this case, if that was going to break out of that trend channel there, we could look at the market like this. So in a nutshell, just very simply an ABC here for the A wave and then building up for the B wave here. Of course, this case would be strong if we could get above the 4,000, because as this market's been falling through here, it's had a bit of a, you know, found a bit of support here, but then continued down and now it's trying to test it back. So normally in that case, we would just short the lows here. But in doing that, as it retests that and fails and breaks down and makes that new low there, we'd look at this as, you know, classic trading levels pattern, the arrival, the reaction, the first low below the level, and then some sort of retest at that point to come out, some retest here, and we work from the lows and work up. It could go above the level, but we still continue to work that from the short side up. Now, if we can find a situation in here that gives us a bearish inclination that the market is going to be heading down, we normally find that in terms of a wave count, or if we see this move up here on lesser volume, or some of the indicators lesser volume than the move down, previous move down here, so to speak. So yeah, the bullish side to this is that we can move up into this space, and there in the stock market there's, you know, there's reasonable cases for that, but there's also an equal case for the bearish side of the market. So with the bearish side of the market, as I mentioned, we can look at this as wave 4 and have a move down for wave 5. We come down into 32, 33 sort of area here for that, and then move up from that point. But there is also the bigger bearish picture as well that we've been tracking, so we can't throw that out just yet. So let's go in and have a look at that on this 10 tick chart here, 10k tick chart. So let's just get in, where are we? 200, 2k should do the trick. Yeah, so from the top here we can look it down as 1 and 2 here, and then 1 and 2 here, and then 1 and 2 here, and then further down here as 1 and 2 here, and 1 here and 2 here, and then 1 and 2 here for this. Now there's different ways to count this down here, so we'll also be looking at that today as well. We'll also be looking at this as a bullish case on this low here. But what I can say for the bearish case at this point in time is that from this low to this high here, this has always been the 50-60% retracement level in this box here. So in a nutshell, we can look to short below there. That would be in its very simplistic terms, that would be the short zone area. Now of course, in terms of shorting, when a market comes down to a previous low, what does it do? It bounces, doesn't it? So as it bounces back up, if it's going to be corrective, it's going to be in 3 waves. So you'll be able to tuck that under here under that second low, and you can continue to refine that, and we'll have a bit of a look at that. So this particular move down through here, we need to have a look at that in a little bit of detail, but this is the bearish count, so 1 and 2 and 1 and 2 here, and then moving down. Now I won't pick holes in why that's not a good count at this point in time. I don't think we need to go into that. All we need to know is that if that low is breached, we need to be on the short side. And this here, I just want to point out in terms of the trading levels, so from 3,000 to 4,000, it's just the Fibonacci numbers 1, 2, 3, 5 and 8, and then it goes back to the power of 10 again. So from 3,000 we could look at 1,000, 2,000, 3,000 and 5,000 and 8,000, and then we go to the power of 10, so 10,000, 20,000, 30,000, that type of thing. So but from going from 3 to 4 here, we count 1, 2, 3, which makes up group 1, 5 is the midpoint, and then number 8 here. And so with this situation, with the 8, when we talk about 8, we talk about group 2, which is 3650 and 3720. I won't go into the reasons of that. I'm just going to remove that from the moment. But this is the natural swing range. When we're talking about a large number, in this case it's 4,000, and that's a medium level, and these are minor levels. So we start from 4,000, go up to 5,000. There's 1, 2, 3 that make up group 1. And if we get support on group 1, then the market's leaving this number. If group 2 here becomes the resistance, the 3650 becomes the resistance, then we're leaving that number to the downside. So in a nutshell, this is would normally need a bit of patience when working these particular patterns, because this is the swing range. When we're talking about this number, this is the swing range. And for trend traders at this degree of structure, you do not want to be making calls too early, because this is the space where you lose money. And once the correction matures, and when it starts, it's a bit of a guessing game. You've got a few ideas and it's good, and it may pan out and it may not pan out, and then it could get really complicated, and then it does your head in, and then you start looking for answers and all the rest of it. But at the end of the day, if you understand that this is the main number that the market's working with, and group 1 above and group 2 below, and all you need to know is that if group 2 becomes the resistance, you need to be on the short side, and if the number 3 up here becomes the support, then you'd be on the long side. Of course, on the long side up here as well, you could also, work it from the 4,000, and you can move in earlier on all of these things, but that's the outside shell of it. So anything in the middle here, if you don't know what's going on, and I often don't know what's going on, and I say that I don't know what's going on, I try to work out what I know and what I don't know, and just keep breaking it down. But there are periods where you just don't know, and I don't know if we're going to be long or we're going to be short at the moment. I'm a trader, so I don't, it's difficult to be an analyst and a trader at the same time. It's easier said than done. But I have a set of rules. So my rule is that if group 2 becomes the resistance, we need to be on the short side, and if group 1 becomes the support, we need to be on the long side here. So in the moment, we're in between a rock and a hard place, but we can pick things. So we know that the first move up here is whatever it is. It could be bullish as well, doesn't matter. But we know that the 61.8% here is the support. We can allow it to come down further into group 2 here, as the 72 here, 3720, 3700, not a big deal. But if that 3700 became 3720 became the retested resistance, for me, I would be building short trades in on that, and then under the 36 here, because the market would drop to the 5, and there'd be a bounce off the 5, and you get another little classic trading levels pattern here, and then you would continue to the downside at that point. So what we're trying to work out here, if we're sort of long or short, so this is the short side with 1 and 2 and 1 and 2 and 1 and 2. This can be counted differently, and we'll pull that apart, and we'll sort of look at the different ways that it can be counted. But at the end of the day, just go on that low here for that short trade for the bigger picture to the downside. Now we need to look at the bullish side of things. So I think I've got that on the 5K and the 2K, and then we'll go to the 100. And I think that we need to have a look at, we will be looking at the NASDAQ. We'll have to have a look at the triple Q. I might look at the SPY as well. Because of this spike in the market here, it's like, you know, I mean, I really despise spikes because it's like, oh shit, do we use them? Are they valid or they're not valid? What do we do with them? Sometimes they are and sometimes they're not. They're just a pain in the butt, really. So let's go and have a look at the bullish side. So I think I've got that on 5 ticks, and you might poo-hoo some of these counts, but it doesn't really matter at this point. So this situation here is that we've got the A wave here, then an A and a B and a C wave here. This could also be counted more complicated as well, because there is a really good case that this can be counted here as an A and a B and a C wave in here. It doesn't matter at this point in time. This B wave will stay on the low here, and it doesn't matter if you start calling this WXY or whatever you want to call it. It's all about this low here. As long as that low stays in place, there's an opportunity, or there's a thing for this to move to the upside here. Now I know that the market looks in the last session looks bearish, and there's bad news and all the rest of it, but you can't get connected to things emotionally because they'll trick you. There's a good case from this little move to the upside here to count that as 5 waves, and we're going to be looking at that as well. So this could be up for 1 here, back for 2 here, and then moving up further up here. So in this case, we really want to be on the long side over here, you know. So for the short people, that's going to do their heads in, you know. So that's why I say you can't be sort of connected to anything at this stage of the game. So as I mentioned, like with Apple here, for example, this big move down here, the market has separated itself from this trend and it's doing something else. Now it could fold back into the trend and all the rest of it, but it has left this leg here, and it's part of something else now. Wave 4s can typically do that as well, and you expect them to, and we can have this as an ABC for wave 4, and we can break to the low side, but we're also working this as an A and a B and a C. So we've got 2 counts going on here as well, and that's what we need to do with the S&P. So for this to move up here, this is a valid situation, and it needs to be respected until it's not, you know, and taking that low out there would invalidate that. And I think we had something on the 2K tick chart here for this. This is more of a bullish count. This is with the low in place. It's probably not right, but it's possible as a wave 1 here, and a wave 2 here, and then 1 here, ABC for 2, 3, 4, 5, and then looking at this as an ABC pattern here. So we were looking for this to pull back here yesterday as well, so I'll just bring that down. The spike really sort of rocked it around a little bit, but it still stayed in place here, and you can see that we've got 1, 2, 3, 4, 5 up here, then an ABC here. So as you know, you might thinking that it's bearish and going down, and you may be right at this point, you know, but it still can move. You know, we still could look at this here as wave 1 here and coming back into wave 2 here, and once again we need to be long above the support on top of 3.8, and you'll need to be long at that point. So it can be counted as 1 and 2 and 1 and 2. Is that right? I'm buggered if I know, but it can be counted like that. So yeah, that needs to be respected. This can also be counted differently as 5-wave structure as well. That's okay. It also could be counted as a corrective structure as well. In fact, it counts better as a corrective structure. So that's where we are with that at the moment, and we're just going to have a look at because of this spike here, we're going to go to the 100 ticks now and just see if we can kind of figure this out a little bit in all of this. So let's just get in some more data here. Probably 10's enough. Yeah, we just want that. We just want this leg down here. This is sort of where the situation is at the moment. So we can count down here from the top here. We can count down as 1 and 2 here, and then 1, 2, 3, 4, 5 for the 3rd wave here, the 4th wave here, the 5th wave here. So we could count that as wave 1 here and look back for wave 2 here on a bearish side of things. I could use a smaller number. But then how do we count this situation over here, and do we include this spike here for this? Because, you know, because here I could look at this as an A wave here, an A, B, C for the B wave, and up for the C wave here, because it takes the top out there. So I could put a B wave here and look at a C wave here. I could also put the B wave here, but then it's difficult. Even if I had wave 2 here, do I look at that as 1, 2, 3, 4, and 5 coming down here and count that as 1 and go back for wave 2 here? So when we have a look at, let's have a look at the, I don't have the SPX on this particular platform, unfortunately, but I do have the SPY, so I'll use the SPY. So there's a couple of counts going on here. So we've got the bearish count as wave 1 here and 2 over here. And then we can look down at this as 1 and 2 here, and then 1 and 2 here, and 1 and 2 here, and it looks quite good just coming down possibly through here, you know. So that's sort of one count for that. This other count here is putting wave B over here and looking at this here as a low. We could go an A, B, and C here and have this as a low over here as well for that. We could also have all of this down as an A, B, C for the A wave, the B wave over here, and the C wave over here. But I've explained all of that before, but just looking at this. So what we want to do is really, we want to have a little look at this trend here. So we're going to go into the 100 ticks and just see if it makes sense, you know. Okay, well that's it here. So from the top here, we could look at it as, because the spike's not in here really, is it? So we could look at this, we could look, well, obviously we could look at this as 1 and 2 here, and that makes a nice third wave, that makes a nice fourth wave. And the fifth wave can just go into here, because the extension's in the third wave, that means wave 1 here and wave 5 could be the same. So we could look at this as 1, 2, 3, 4, 5 here for that. Now this has got a little spike on it as well. Do we use that? Do I bring that down here? Do I put that as 1 and 2 here, or an A and a B here? And then this next move here, we could look at this as 1 and 2 and 3 and 4 and 5 here. So that's 5 waves here. So how do we count that? We could look at it as, well, wave 1 and 2 and 3 and 4, but that's a bit high for wave 4 really, isn't it? So if we take this top here to this one here, it's pulled up 61.8%. So it's a bit of a stretch to call a wave 4 that should be 40% to 61.8%. Is it possible? Yeah. Plausible? Yeah. Probable? No. So the other way to count this then is looking at this as wave 1 here and wave 2 here. And then the next move down here, doesn't really matter the degree of structure, I'm just looking at the bearish side at the moment and calling that wave 2 at this point. That would be satisfactory at that point. We could also, on the bullish side, we could also look at this as wave A here, wave B here, because this is nice and clean, this particular SPY thing, and wave C here. So it kind of makes a nice ABC correction as well, doesn't it? So then we got to go in and have a look at this here, and then we think to ourselves, well, okay, how do we count that? That could be, what could that be, wave 1 and ABC here? Is that possible? Or wave 1? That certainly looks, that's the strongest move in the bunch, isn't it? So that's really got to be, we've got to look at that as wave 3 really. That's the best way to look at that, and that would be wave 4. And even though that I don't understand what this is here, it's probably some sort of wave 1 and wave 2 in here for sure. I could call it an A wave, a B wave, but then what do I do with this here as I don't have 5 waves in that move there, so that's not going to work. So it suits much better as 1, 2, 3, 4, and 5 here for this. And then we can look at this here as the A wave, the B wave, and the C wave coming down here. And the C wave would come down at 60% roughly. So we can put that up there. We can look at this in here, so that's 50-60% in there. Look, you know, it's just like sticking a couple of flags in the ground, really, because wave 2 can pull back 80%. It could pull back, technically can pull back 1 point to this current low here, so you've got to be a little bit philosophical about that. The 380 is the most important number in here. That's the top of group 2. And then would have 72 and 65, which is further down. So I'm just going to play this out with a different design on it, just to give it a bit of definition, because obviously you would think to yourself, you can see that that's important here, isn't it? You know, and was important too, because really this, from this last leg here, that's the 50-60% retracement level there, isn't it? So that's a good reason. And normally what I find is that if I take the last leg of something and I put the 50-60% there, and if I get 3 waves up to that, then I'll look at it as corrective. If I look at 5 waves up to there, well, then I'll look at it as being sort of bullish to that point. If it was only 5 waves up to the 40%, then it could still be an A wave and a B wave and a C wave up here. But because it's pulled up to the 61.8%, then it's got a good possibility of being completed, you know, that segment being completed at that point. The next level's down here. We talked about this being group 2 here. Well, when you see another number 8, it's going to be part of a group 2 as well. So that's minor level, and these are sub levels. So then we can go the 65 number, which is 37650 in there. So we don't want that becoming if that became the resistance, we'll be looking to short. So 37720 is a 72 number in there. So this is where the support's going to be, and this is all you really need to know at this point, because if this group 2, because we talked about group 2 at the 4,000, didn't we, level, which is the 380, the 72 and the 65 down here. But in this case, we can just use this number. If this becomes the resistance here, this area here, then you know that we're going down at that point. In fact, you could probably use 72 here, the 3772. If that became the resistance, then you could look at it like that. But we're going to put that wave C there. And that means that, in a nutshell, we can go long above here. That would be the trade there. And if this becomes the resistance, we can go short here for this. So in this case, we can also look at, let's just assume this comes down here in 5, that would be 1 and 2 here with third wave, fourth wave and fifth wave. So the fifth wave comes down here somewhere. Let's say that the market bounces back up here, and you'll get a classic trading levels pattern to the long side. So all you're looking for is that first high above the level. So you put that on top there. And then if that's breached, and as you know, if you know the pattern, then that would be, so that's the arrival, the reaction, the first high above the level, the ABC pattern, and then pushing up. So you could also look to come down onto the second level here. If it's a bigger picture, you could refine it and do this little move up here, do the whole thing again at the 380 there. But that's the long side. And the short side would be, you could use the 72, but I'll just put it down here. You want the first low below the 65 here. Find that first low below the 65 number, and then you can look to short at that point. But you don't go chasing, it's just like this here, don't go chasing the breakout through this number, let it be there, you know, because that's where you'd go short from here, and then you bring it up to the second one here, just like this in reverse, but over here, just doing it over here on the short side. So that's what you want to do over here for that. So this is where this is at this point in the market, this is where the whole shabambles is coming to a head, being bullish and being bearish. So it's quite clear, whichever way you want to look at this here, because if you're going to count this here, it'd have to be 1 and 2 and 1 and 2 at this point to the downside. But as a wave 2 here, it doesn't count very nicely as an ABC correction, but I've seen weird things before, so you got to be careful. So either way, you know, you'll have your own opinions, and yeah. But for me, taking this out and going short here would be it. So this is a nice clean picture. So when we revert it over to here, then the same thing happens here as well. We can look at this here as wave 1 here, 2 here, 1, 2, 3, 4, 5, kind of ignore the spike a bit and bring that down here. Look for that, and then back for wave 2 here. Also look for the 61.8%, all the same numbers. The numbers that we used over on the SPY will be the same numbers here, just the power of 10 really, you know. So this counts up as 1, 2, 3, 4, 5, and ABC pulling back to the 61.8% mark in here. The 3772 is going to be a really important little number in there, because that's the center of gravity, or the center of the subgroup 2 in there. So I'll just put that there, and of course the little 80 above it's going to be important, but I'm going to put this in because then I know I've talked about it last time I've spoken, and I know that I've done my job. So that will be 80 in there, and then 65 here, 3765 in there. And if that becomes the resistance, then you know you need to be short you can start shorting at that point, you know. So that's there, that's there. I'll put that over here because all you need is a classic trading levels pattern back on that there. Yeah, this could be an A wave, a B wave, and a C wave here. Because of the spike, you could probably count it in other ways as well, but that's that. So moving along to the NASDAQ. So I don't really need to repeat myself in the bigger picture here. We're basically looking at the bullish side and the bearish side. So the bearish side would have this as wave 2 up here, as you know, and this would be wave 1 down here, and this would be wave 2 here, and then wave 1 here, and basically moving down. But it's the same sort of story. It's just how you count the whole, how you count it. I can see that it could be counted in different ways, and because of the spike it doesn't make it a little bit easier. I mean, I can go here as 1 and 2 here, and then go 1, 2, 3, 4, 5 for the third wave, and A, B, and C for the fourth wave here. And then, I mean, technically that would be correct, but otherwise we'd count this down as 1, 2, 3, 4, and 5 here, which to me makes a little bit more sense, you know. But if I don't point out what I'm doing, then you know, it just leaves it sort of open for abuse and whatnot. So, but yeah, so I to be honest, I don't know what the best way to count that is, you know. But now that the dust is settled, we can look at this and go, okay, well, we can look at this as we looked at this as the A, the B, and the C down to this point here for the S&P. This number here, this 11,500, this is really the line in the sand for this market. It's a medium level, and if this becomes the resistance, the same thing again here as well. The markets could get quite volatile over the next few days if it's going to be bearish. But you see how the market's come down through here and then made that low here and then gone back up, and then it's created another one over here. You might make some mistakes in here because and I make mistakes as well, but then you just get back on the horse. So I might have gone short here, for example. It might have even gone short right on that little low here, and the market's come down and then gone up, and I would have been stopped out because I would have kept my stop above there. And then I would have gone short here, and then I would have put my stop here, and then the market's come up and taken me out. Normally I get out before it comes and gets me. I don't like things turning into a loss. I don't mind break even or a very small loss. But so then I think, oh, okay, now we've got a low in here, and then I can use this one here, but I might make another mistake in here, and then I'll get this one over here, and then I'm sort of a bit scared at this point because I'm getting beaten up, and then I can use this one and this one and this one. I'll get this one, and then the same thing happens again here. So in this case, my bearish move was never really successful. So when I come back over here to do it again, that memory of that will be over here, will come back over here and haunt me. But I need to realize what I'm being haunted by as well. But I still need to go back in there and do the same thing. So this number as the resistance it will be critical to the downside. If we have a look at, you might think, well, Pete, there's not a very nice 5 waves up there, and you didn't mention that. So when I have a look at the triple Q here, for example, It's the same thing here as well. We can look at this here as 1 and 2 and 3. That would be fair, wouldn't an ABC for the fourth? And you can see 5 waves here, 1, 2, 3, 4, 5. Hasn't made a really nice low here for that, but we'd have to go 1, 2, 3, 4, 5 for that point as wave 1 maybe, and wave 2, and then down for 1, back for 2. And maybe 3, 4, and the drop is the 5th wave or something, you know. Once again, it's too high for a 4th wave in this case, isn't it? So would you take it from the top here? I guess that would give it its max. So also at 61.8%. But in this case here, we've got a really nice sort of 5 waves up here that you can't really ignore. We've got 1, 2, 3, 4, 5. Then you got, I can't see in there properly, but that's a nice strong 3rd wave here at least, and an ABC for the 4th, and then up for the 5th, making a new high, an A wave here, B wave here, and a C wave here perhaps, you know. I could be wrong, and it could come all the way down here, but it's quite a nice looking wave 5 at that point. So I'll leave that to you at this point. But in terms of going long here, we want to be long above that B wave, but you may be able to get a better position than that. I don't think the trade will come through until Friday, late Thursday afternoon and Friday. Wherever the market closes on Friday, well then it's going to probably follow through on the Monday as well for that. When we come over to the Russell, with the Russell here, I've kind of kept it, with the Russell and the Dow, I've kept it on the short side mainly. Let's just get in a bit more data here to squeeze this in here. But the pattern goes back way over to here, of course, and you know, it makes a nice ABC up here, which can be wave 2, and then we can come down for wave 1 here, and then we can come over for wave 2 here. The reason I don't like wave 2 is because this is really big compared to wave 1 here. That's the reason I don't particularly like it. I think we're in some sort of bigger correction here, but you know, it's giving all the bearish sort of signals, but I just think that there's a good possibility that we can go up here further, you know. I can see all of this is telling us it's bearish, got the lower high here and so on and so on, but let's just still be a little bit careful. But breaking it all down, we just break it down into just exactly what we talked about before. This low at 1700 and this and 1730 here as the high. So we'd been waiting all through here for this to land and then have its first kickback, and that would give us this point and this point, and we've got those now. So all we need to do is work those to either the upside or the downside. And the Dow Jones here, this is just the bearish count for it. So 1 ABC for 2 here, and then 1 and 2 and 1 and 2. And just looking at the bearish side, we can look at the bullish side, but I don't know if I got that on another chart. But anyway, down for 1 here. And then across for 2 over here for this. Doesn't count very nicely as a 1 and 2 here, I have to say, but still, we can't just sort of throw it out at this point. So in this case here, we can go long above this one here, but you wouldn't go long above there. You just look for a classic trading levels pattern to really confirm things. So if the market was going to move up, then you want that first high above the level. That's your reference. That's your first reference point, and then you could get the second high and move in from that point. If this low gets taken out here, then you need to be on the short side at that point. Because of the spike here, you can count this in different ways, but as 1, 2, 3, 4, 5, that's kind of reasonable, I thought. Wave 2 here, I think I'd just look at this as 1 and 2 to here, forget the spike, and 3, 4, 5 here. So 1 and 2 and 1 and 2 at this point. You can't have that as wave 4 because it overlaps wave 1 over here. So that would be the downside movement there. And also too, just understand that when the market does come down here, there's going to be some sort of rally off that low there. And then you always just gravitate over to the closest, largest number over here, whatever that may be. So 5 is the strongest number. Second strongest number in this area, so that's the 30,500. So the 30,500 is the retested resistance, is what you'd be looking at that point, but you can knock it up under that second high there as well at that point, because another breach of this low here, I think that would pretty much send it lower anyway at that point, you know. We've got the stochastics pulling back down, so we can expect that to bounce anyway. But so yeah, Is it bullish or is it bearish? That's the $64,000 question, but all I can do is just present the both cases at this point and look at possible entry points, and that's what I've done. And that's your bloomin' lot, as I'd say in UK. Alrighty, thanks for tuning in. Cheers.